Most traders believe the MACD indicator tells them when to buy and when to sell. That is exactly why it leads so many of them into trades that do not work. The problem is not that MACD is too complicated. The problem is that most people were never shown what it actually does. They add it to their chart, see extra lines, bars, and colors, and feel even more confused. So they do what most traders do. They start looking for signals. They watch for crossovers and try to turn MACD into a complete trading system. At first, that can seem like it works, but then trades begin to stall, moves fail, losses start to build. Not because MACD is broken, but because it was never meant to be used that way. MACD does not tell you when to buy or sell. It measures momentum. It helps you see how strong a move is right now and whether that momentum is increasing or slowing down. When you look at MACD, you see two lines in a set of bars called a histogram. The lines help show when momentum is shifting. The histogram helps show how quickly that shift is happening. When the bars grow, momentum is increasing. When they shrink, momentum is slowing down. This is where many traders lose control. They take something that shows behavior and try to turn it into a decision. The most common example is the crossover. When the lines cross upward, many traders treat it like a buy signal. When they cross downward, they treat it like a sell signal. But a crossover is not a signal. It is evidence that momentum has already changed. By the time it appears, the move is already underway. Sometimes that delay can still work, especially in cleaner trends where price continues moving in one direction. But markets do not always behave that way. When price starts moving sideways, follow-through becomes weaker. Momentum shifts back and forth, and MACD simply reflects that. It cannot tell you whether the move will continue or fade. It can only show you what momentum is doing in that moment. So if MACD is not the answer by itself, where do you look? You shift your focus back to the chart. Candlesticks help you read price behavior at important levels. Those levels are your structure, the places where price has reacted before. Volume shows participation, how much interest is behind the move. MACD reflects momentum, showing whether price pressure is building or fading. VWAP helps with location, showing where price sits within value and structure. And even if you understand all of that, many traders still lose control because they ignore one more thing: the environment. Before you even look at MACD, ask a better question. What kind of market am I in? If the market is trending, momentum often carries more weight. If the market is choppy, momentum becomes less reliable because price can rotate without follow-through. In those conditions, the better decision may be to trade smaller or not trade at all. When the environment is unclear, forcing a trade only creates confusion. When you learn to read the chart this way, everything starts to slow down. You stop reacting to movement. You stop forcing decisions. And you begin to see what is actually there. That is what Chart Whisperer is about. Not predicting the market, not chasing signals, but understanding how the market behaves so you can stay in control of your decisions. And if you are learning to trade this way, subscribe, because this channel is built to help you understand the market, not chase it. In the next video, we will bring everything together with VWAP so you can see how structure, participation, momentum, and location work together as one framework. And when those pieces begin to align, the chart becomes clearer, your decisions become more controlled, and instead of guessing, you start responding to what the market is actually showing you.